Hello again. Welcome to another episode of the Uranium Market Minute. Today is Friday, November 19th. This is episode number 39. I am Justin Hune. I'm your host. I'm the founder of the Uranium Insider Pro newsletter, the only investing newsletter that focuses solely on uranium and publishes on a regular monthly basis. Thank you so much for tuning in again. I really appreciate it. I did not do an episode yesterday. We were hosting our members only webinar. If you did join us yesterday and you are a member, thank you so much for being there. Really had a great time and really appreciated the great turnout. If you weren't able to join the live webinar, we do have a replay up posted to the website in the members section. If you're not a member, anytime you join, you will have access to that replay. This is a 2-hour long live webinar. We went really deep into the sector, really deep into the companies that we own and recommend, some of the trades that we're doing. Again, we had a special guest from one of our focus list companies join us for the second half of the webinar. That was a huge value add. I want to also again mention that at the end of the month, December 1st, we will be raising our prices for the Uranium Insider Pro subscription. If you do decide to join us before that date, you will lock in the current price for as long as you want to be a member. So thank you so much for all of the support we've received. And let's jump right into the daily scoreboard. The spot price of uranium today dropping down 25 cents to $47 a pound. Not a whole lot of action going on in the spot market right now. The Sprott Physical Uranium Trust took in 15.5 million over the last 2 days. These numbers I'm going to give you are for 2 days since I did not do an episode yesterday. Most likely that smaller amount of capital raise has to do with the fact that they are not trading at a huge premium to NAV for the bulk of the last 2 days. In fact, they closed yesterday at a slight discount to NAV, 0.31%. Of course, they need to be at least at a 1% premium to NAV to issue shares into the open market because they take a 1% fee when they purchase uranium. Had a question in the YouTube comments yesterday about the ATM and where the money comes from. The money comes into the ATM from the open market. So traders, speculators, investors, institutions that are buying units of the Sprott Physical Uranium Trust on the TSX through the open market. Those shares, some of those shares are from people selling the trust, and some of them are coming from the broker dealer serving the Sprott Physical Uranium Trust, selling those units into the open market to raise cash to buy uranium, again, when they're at a 1% premium to their net asset value. So the almost $1 billion that they've raised in the past 3 months, that's coming from investment capital in the open market, which makes it that much more astounding. And some of it also, some of the purchasing is coming from that sort of flywheel coming from URNM, as they are a decent holding in that ETF. The Sprott Physical Uranium Trust did buy 300,000 pounds of uranium on Wednesday, but they did not buy any yesterday. The end of the day yesterday with almost 60 million in cash, enough to buy another 1 million pounds of uranium. Since the 17th of August, when their ATM went live, they have raised 992.8 million of new capital, almost $1 billion in 3 months. They've purchased 21.3 million pounds of uranium. So they have just over 300 million left in that current ATM. Then they will file for a third one when this ATM runs through. We will most likely see them do at least another $1 billion. And we, again, just continue to say that we really shouldn't be annualizing these numbers because they're so huge, but they just keep chugging along. So just a big player in the space, obviously. Turning to the sector equity ETFs, the last 2 days, URA reported no change in their outstanding shares. URNM reported a redemption of 75,000 shares, giving rise to 7 million in mandated selling. Over the last 2 days, the AUMs did fall by 35.7 million, which basically is a result of the stock price moving down as the sector chops along. These two ETFs still have a combined AUM of just under 2.5 billion, right around 2.4 billion. That's an increase of $256 million month to date. Let's take a look at the charts. Starting off, as we do, with URA, because it's the largest and most liquid vehicle in the uranium space, and generally speaking, where URA goes, the sector goes. A decent day of selling today, although the volume is low. It seems like the buying pressure in the sector is taking a little bit of a breather here, but the sellers are also not that motivated, judging by the volumes. So we're seeing, again, I've drawn this out a million times for you guys. We want to see increasing volume on the way up, which is what we see here, right? Boom. Decreasing volume on the way down. That's exactly what we want to see. And that is exactly what we're seeing. Indicators are showing we're not quite ready for that turnaround. I wouldn't be surprised if URA comes down to this 50-day, maybe moves sideways for a couple of days before the sector finds a bottom on this recent correction. Hopefully that is a higher low than the previous one, which would maintain this bullish uptrend that we're in. That's what I'm expecting. And what we're seeing here currently, in my opinion, is the continuation of a healthy correction in the sector. The Sprott Physical Uranium Trust moving down again today, although we are seeing some dip buying. The volumes are low. The volumes are low because we're likely still at a discount to their net asset value. And it's going to take either the spot price falling further or some new money coming into this trust to get back to that premium to NAV. In my opinion, this is going to make a higher low here, and then we'll see those volumes come back in, likely really big volumes to buy more uranium and move the sector back up. Taking a look at Cameco, one of the large caps, again, a pretty similar chart to URA, seeing a bit of dip buying here, but very low volume for the most part. Looks like overall kind of sector malaise, waiting for this correction to find its bottom, likely at a higher low, before we move on to the next leg of this bull market. Mailbag question today coming in from Ian M. We are starting to see some M&A in the uranium sector. Do you expect more of this going forward? So M&A, mergers and acquisitions. Yes, we definitely expect the secular bull market goes on. There will be more acquisitions. Companies try to create more critical mass and undervalued plays that are accretive to larger companies in the sector. Basically, when we start to see M&A in a resource sector, what that really means is that the companies in the space are saying that what they are seeing, they believe is real, and they expect it to continue to move in a positive direction. And so we recently saw that Deep Yellow Limited made a bid for Vimy Resources. Vimy is an exploration/development company in Australia. Deep Yellow is an ASX-based company, but they have projects, development projects in Namibia. It has long been expected that they would be going after another smaller company. Vimy did not respond to that bid, but it's good to see that in the sector. And in my opinion, it basically means that these acquisitive companies will be attracted to these exploration companies whose projects offer some blue sky, which is basically meaningful upside. The acquisitions typically happen in companies that have started to prove out a reasonable asset, and a larger company sees much more upside in value for that asset and for that company itself. We've seen a couple of other M&A plays over the last 12 months. And in my opinion, this means that the sector is kind of firming up here, and the companies are believing in the fact that this bull market is real, and they expect the sector to continue to move in that direction in the mid to long term, and potentially even in the short term. So it's a very good sign. It's a sign of a healthy market. Of course, the uranium market is so small. We have 64, 65 publicly traded companies at the moment. So not a lot of companies large enough to take out other companies, and not even a lot of companies to be taken out. But I do expect we will see more of this moving forward. All right, thanks so much, guys. Hope everybody has a wonderful weekend, and I hope that you all are sitting tight in this correction, or if you are still positioning, you're taking advantage of it. It's difficult to say how many deals the market is going to give us before we make this next leg up. So I've been a buyer this week, and I'm pleased to see the low volume selling looking like it's trying to find a bottom here. All right, hope you have a great weekend. We'll see you guys next week. Cheers.